Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, May 6th, 2013. We'll be looking at a few charts that have caught my attention and probably the most potential in them at this point in time, so that's why I'm showing them to you. We're going to start off looking at the VIX, the volatility index. You've got to understand about the VIX is that it runs the inverse or the opposite of the S&P 500. So if you see the S&P 500 being really bullish, you should see the VIX being very bearish, and vice versa. Whenever we look at the market that we talked about on Friday, and we said that the market move you're seeing right now in the stock averages out there are fake, that's important, because if it's true, then the VIX should tell you the same thing. And when we look at the VIX, you can see that we've had this massive move to the downside here over the past 2 days. We had this move down here and here, obviously much lower than we were a minute ago, leaving us a nice gap here. We also have some other gaps on the chart here and here, so we'll talk about those later. But the main thing here on this overall condition is to point out that you have this low point here looking at the close whenever you're going to compare it to the ultimate oscillator, which is this indicator up here. Whenever you compare this price activity, you always want to use the close, not the lows of the candlestick. So what we see here is a low close here, and then you see a lower close here. So we're obviously trending down right there, right? Okay, but at the same time period, when we go up here and we look at the ultimate oscillator, we see we're not getting that confirmed. We're getting a situation where we see higher highs, meaning momentum to the downside is actually decreasing, not increasing, and momentum to the upside is increasing. So this should be actually flipped the other way. We've seen this before when we talked about this back when this time period was happening. When we had this sell-off that we had a low close here, back in this time period here, here and here, and you can see that we had a higher momentum indicator on the ultimate oscillator, so we were actually trending up ever so slightly right there. And the same time period, like I say, we had the low close and lower close and lower close. When that was happening, we were telling you this is not sustainable. It's an overshoot to the downside. It's actually should be looking for an initial opportunity because it's going to reverse in the other direction. And that's exactly what happened. All right. So here we have the exact same condition. It's just developing. It can go on for a couple of days, so it's important to keep an eye on it. But I am looking here for an entry opportunity. A nice hammer candlestick formation with the confirmation, and I could get on the long side on the VIX, which you have to use an ETF to do that. But that also would tell me that I should be looking for a sell signal on the S&P 500. Remember, whenever you're looking at the VIX, you're looking at the inverse of the S&P 500, so that's important to note. Again, it's important also to think about what the VIX is actually showing you. The VIX is the option activity of the pros out there, and whenever they are concerned with the market maybe peaking, they'll buy up a lot of options to protect their positions, and that would drive the VIX price higher when they buy a lot of them. When they think that no, it's okay, there's no worry out there, they would sell those positions and hold on their stocks to be more confident about that, and you would see price go lower, right? In this particular case, you're seeing a fake move lower. So in fact, they're not bullish. It's just a fake situation here. So this is, again, important that you stay focused on what's really happening fundamentally, what's really happening technically. When you look at the price activity, is it really being confirmed, or is it just a BS move that's going to eventually lead with? You can see you have days down here. Well, actually, from this point here. So you've had about 1, 2, 3, 4, 5 days to the downside here where you were just technically unsustainable. The chart was clearly telling you that. We were told you that when it was happening, that this was an unsustainable situation, obviously indicated by the ultimate oscillator. Now you had those 5 days of technicals are wrong, and then what happened? You have weeks of no, technicals were not wrong, you were just a moron. A quick little glance here at the SPX, the S&P 500, just to show you how the inversion goes. You can see that we have a series of higher highs going on the S&P or the SPX right here. So that would be a bullish condition if it were actually confirmed in any way, and it's not. We're actually getting lower lows here, and that's confirmed by the lower lows on the ultimate oscillator. You're getting higher highs between this point here and here, yet it's not confirmed by the ultimate oscillator. You have a lower high here, 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 here. That's telling you that all of this is just BS. It's going to turn around and revert back to the actual direction of the true trend, which is obviously down, down, and then we'll get lower again. So pay attention to that. Okay, now that I've shown you the S&P, I'm doing that just to confirm the VIX. I think the VIX is a better trade there on the ETF trade there. It's a real clear situation. If I was going to go looking to play an average or an individual stocks within an average, I'd be looking at the Russell 2000 Small Cap Index, and this is one of the main reasons here is it's very, very bearish chart formation. I know that you have had a breakout to the upside here. It doesn't concern me. The overall breakout is on a low volume with massive gaps below it, 1, 2, 3. That doesn't typically get to maintain that condition back here. You had a little gap here a couple of them along the way. I think we had a small one here, another one here, and what happened? We turn around and we just fill all that. So again, when you do this number here, what do you think is going to happen? You're going to turn around and fill it again. At the same time, you get the high point on the ultimate oscillator here, here, and then obviously here, nowhere near coming up here. So we're obviously trending down here, momentum, and yet at the same time period, you can see high close, higher close, higher close. So this is actually not sustainable. It gets erased. We know that anyway from the gaps. And in all this situation here, I'm looking at this, obviously it's being a peaking situation, but I'm also looking at the fundamentals and asking myself which company is going to do worse. When you raise taxes, when you add in a new healthcare regulation, when you do all these new elements that you have to do to support your failing economy and your government shortfalls, who's going to get hit the hardest? The well-established company that's been there for forever, or the company that's the smaller cap? So obviously, I think the smaller cap is going to get hit harder, and therefore I'm expecting a lot more downside potential here than I would be in something like the S&P. That's why I would look here rather than the SPX. Okay, looking now at the Nasdaq, this is a mix of massive, large companies in the technology industry, as well as smaller and mid-sized. So there's a lot more variety in here. But again, the chart shows that we have a massive formation going on here. This unsustainable. I showed this on Friday, and basically all we're seeing is an increase of volatility. Upside moves here. We have massive gaps: 1, 2, 3, and 4. Again, the ultimate oscillator indicating that it's not a sustainable, it's a fake move to the upside, but not on the downside. So again, I want to be looking for that and keep it in mind again that your leading indicators and your leading charts are not the U.S. I know people think they are because we're the ones going higher and we're the strong ones of the group and blah, 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 blah. The reality is the real problem is Europe, and it's getting a bigger and bigger problem as time goes on. So keep a focus on Europe, and I keep all those charts. All my charts are kept at the free website at perfectstockalert.com. So I recommend you check them out nightly because I update them whenever the day closes with any new signals that I see. Also, I've updated the gold, silver, and the Toronto Stock Exchange chart, as well as I believe it was the DAX, German DAX. So check them out. I've got new signals on them as well. Okay. For those of you guys who be looking for those charts, I can go into the market section, market charts right here. Again, update every single night. If it's a black arrow, if I mark it with a black arrow, it indicates that I would be buying or selling depending on the direction of the arrow as soon as I had confirmation. So it's important to note. And if it's a blue arrow, it indicates I would take the action immediately. So that's important. Okay. God bless. Take care. I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.